Hi, everyone. We have Adam Button with us. He comes and enlightens us with his views every month. Adam does a lot of seasonal work. And Adam, welcome back to TradeGATEHub. It's great to have you here. It's been kind of an interesting week. Gravity has been discovered in different asset classes. Gold and silver got hammered. NASDAQ stocks under pressure. And I know what you want to talk about, and it's what a trader friend of mine calls the wrecking ball, and that's the US dollar. So I've got it up here on the screen. What are your thoughts? I mean, this looks like it was some type of breakout over 93.50, and as long as we stay above here, what's your scenario for the dollar next
Yeah, I
month?
mean thanks for having me, first of all, Dale.
Great to have you.
It's quite a move. I mean, it's been brewing for so long. I mean, show the dollar index and it gives an idea of the picture just sideways, right? Or dollar yen has just been stuck. And now, it's a huge technical move. Dollar yen, euro dollar, and cable are all busting out of, I mean, major ranges. And there was that triple bottom in cable. It's a little bit obscured there,
Yeah,
but
I could get
it's
rid of my
busted
fibs.
through and it's just crumbling. And so the second question is really why, right? You need to, I like to match up the fundamentals and what the technicals are saying. And it's not, the sort of simple answer is that the Fed tapered and now the dollar's strengthening. But
So did BOE talk
yeah,
like
well,
a
that's
hawk.
exactly it.
So why do you think the pound's taking the worst of it? Could it be with what's happening over there, Adam? With they don't have drivers, so people are in gas lines. Could it be the Brexit hangover that's made supply chain issues exacerbated them?
Yeah, I mean, but it's not just cable either, right? So, and I think that is a thing. And I'm just hearing that they might have to cull, I mean, 100,000 pigs because they don't have slaughterhouses. They don't have workers at slaughterhouses. And an
Wow.
interesting thing that Powell said yesterday, there was this big forum with all the big four central bankers, and he said, supply chain issues are getting worse. The others really
Right.
talked about and said, well, we think it'll get better here in 2 months or in 6 months. But his point was that it's getting worse. And if you look around, the International Seafarers Union came out yesterday with this big report and saying, listen, our people have been stuck on ships, some of them for 18 months, not allowed any shore
Yeah.
leave.
Port of
And
Los Angeles is a perfect example. They have people out. They have cargo ships out there as far as the eye can see, waiting just to pull into port.
so these people are just leaving the industry, right? So you're starting to get a people shortage. So yeah, that's a Brexit issue, but it seems to me it's more of a global issue in a lot of these supply chains. And as bad as it is now, I was thinking, well, geez, it's a good thing China didn't have COVID too bad, because if their supply chains were shut down to compound this, who knows where we'd be right now. And they've had some shutdowns, but not to the extent that we're seeing in Malaysia right now or something else. But
Well,
so
they're having energy problems there, and they're also having some port closures in
so
China.
what I kind of sort of come back to on the dollar move, it's quarter end, right? First of all, it's quarter end. So you can't separate that. And, the city models are out there saying it's a dollar buying quarter end. And then maybe we hit some stops and ran it a little bit further than it really needed to go. And some of that's coming out of it today. So maybe it's
Yeah.
as simple as that, but it's a big technical breakdown. And, this inflation story, I think a lot of people are leaving team transitory here and saying, listen, this bottleneck issue is bad. It's getting worse. The prices are going to go up. Workers are walking away from jobs and demanding higher wages, better working conditions, whatever it is. And this isn't going to sort itself out. And whether that means corporate profitability is hammered, whether that means central banks come out and hike rates, or everything just tightens up, and you get this sort of risk off mood. And then on top of that, we have China worries, right? I mean, those aren't going away about just the strength of the economy overall. So you have this wall of worry, and it's not just the little things like the debt ceiling. I mean, it comes up. Yeah, it's okay. Maybe this time there's a mistake and it doesn't get done. I don't really buy into that kind of thing. These other issues they're there and they're getting worse. And, I get the idea that, well, okay, you buy the US dollar. Maybe it's not the most intuitive thing, especially since it's moving on the yen. But, the Fed starts hiking rates, or,
Are you familiar with the milkshake theory?
Go on.
Are you familiar with it?
No,
I'm not. Well, there's some proponents of it. I'm not. I think it really has to do with third world debt being tied to the dollar and the demand for the dollars, and they're super bulls in the dollars. They think, they're talking numbers like 120. I don't know why they call it milkshake. I love milkshakes. Can't really drink them anymore, Adam, but it's one of the kind of like the dollar goes up and everything goes down type of thing, because it's a kind of a credit crisis. And, you brought up China, so I want to go with this. Adam, back in 2008-9, when our continent was in a housing bust, recession, banking crisis, the whole thing, China was not as impacted. And economic writers were talking about China not being as effective. They're still growing. And along with what central banks did, it was China being the growth engine that could help pull us out of a recession.
Yeah.
So with them trying to manage a demolition of leverage, isn't it possible if they could pull us out of a recession when their economy was smaller 13 years ago, that couldn't they take us into recession now that they're 1/3 of global GDP?
Well,
what they're doing.
Absolutely. And I think the great untold story of the financial crisis is that China's stimulus was enormous coming out of it. And that it lifted the whole world at the time, and particularly commodity markets. So, we're in sort of possibly a reverse. Now, BlackRock was out on Monday saying now they're expecting China to ease, right? China started doing that, trying to do that graceful deleveraging, where they kind of take a little bit of air out of the property bubble and then you keep the rest of the economy going. You would think, but then there are also some signs. I mean, China's so opaque. There's also some signs that they may try this common prosperity move, and may try to, hammer these billionaires, really go back to more of a communist kind of model. And that's sort of the tail risk that you have to be pricing in right now. And it's ugly. But then
credit spreads blew out to what, 14%? Adam, you watch that stuff. Have they ever been that high in any crisis?
You get those sort of. I mean, overall their junk market isn't so bad, but you wonder where it's heading. I mean, if people lose, it's a confidence market property. It always is, right? That prices are always going to go up, so I'll buy. And once you take that away, it falls. And there's no, I always feel that psychology in the housing market is so much more powerful than people let on. And it lets things get way away from incomes. And that's where we're at in China. And can it really unwind?
Values have dropped 40-50% since Evergrande.
And some of them, I mean, they're giving away for people, they owe money to Evergrande, right? And they're giving them houses instead. And so they're just going to dump those houses, right? So then you add more supply to it. So, can China manage it? Maybe, hopefully. They're talking about easing on restrictions to buy second houses and investor demand. So you kind of let some air out of the bubble and then put some air back in. And it all gets pretty complicated and risky, right?
They're pretty young, in terms of global central banks. They don't have the same type of experience that the Fed or the BOE or some of these other central banks around the world have had and seen as many cycles. And the Fed has made plenty of mistakes with that type of experience. So it's going to be interesting to see how they handle this. Do you think it's also just part of their strategy? Please don't, accuse me of being a conspiracy theorist, but COVID did come from China, right? We don't know the intentions or how it happened. And now could a credit crisis, which is not happening on its own, but happening through draconian measures that the government is taking, is that their next export to the global community is a credit crisis?
Yeah, I
And
mean,
why?
I don't. Yeah,
Why?
well, that would be the better question.
Yeah.
And I don't. I mean, I think China wants growth, right? I think China wants prosperity. You know, Xi talks about, you know, there's still 250 million people in China living in poverty. I mean, there are more people
Yeah.
making, I think, $80,000 a year in China than there are in the United States now, because it's such a big country. But there are also 250 million people living in poverty, and you know, their model sort of works because the people who are living in poverty, you know, support growth. I mean, it's like any model of cheap labor is it's very valuable resource,
Yeah.
but they may be trying to level it out. And that's what he's saying. But you know, that's the kind of thing politicians say all the time. So what actions will they take? I mean, if you're Jack Ma, it's certainly pretty drastic, the actions they take, and seemingly from him.
Is he in jail?
Yeah, who knows?
Yeah, that's what I mean.
I mean, you got to be scared if they can take him down, everybody.
Yeah.
So, you know, China, but you know, you hear all these people talking about Evergrande or anything about China so confidently. Well, this is going to happen. That's going to happen. And I think
how does anyone
that's ridiculous.
know?
It's ridiculous. Nobody knows anything about China. So you just wait and you listen to what they're saying. And, you know, you watch the numbers, and their numbers aren't good right now. And then you watch the central bank. We need to think the next big headline is, okay, is there some easing? Is there some? And I think that could be literally any day. It could be this weekend.
I know one thing about China. They want to dethrone the U.S. and its reserve currency status.
Right.
That's one thing I do know about China. How they accomplish it, I don't know. Maybe this is part of it. I'm interested when we go to the dollar. You know, you're talking about a basket. I was wondering why your currency, Adam, your loonie, has not kept up pace and weakened as much with the dollar going to new highs here. Canada has put in a couple lower highs there. Right. What's happening?
Well, you know, I think Canada can hang with it, if not do better. I think the big story is energy, right? Where Canada's an oil exporter, natural gas exporter, plentiful reserves of really every commodity, and in an inflationary environment we're talking about, I mean, there's no better hedge than energy and commodities. So, you know, it could work out very well for Canada, and you see Aussie and Kiwi are holding in as well. But you know, and it kind of brings us to energy as well. And you know, I'm a long time oil bull since the bottom of the bottom here, since we were talking about negative oil. And there's just no investment that's going into energy right now. And we're sort of seeing it in gas in Europe, which is an incredible crisis that today we're hitting new records in prices everywhere. And, you know, that feeds back through to the stagflationary story, right? And is oil next? And if you look at budgets right now, this is the time of year the oil companies set budgets for next year. And they're not, you know, Brent hit 80 this week. They're not planning to spend more, it seems, you know, so far. So that, you know, there's some OPEC spare capacity out there, maybe not as much as OPEC says it is. I mean, Russia, their production now has been stagnant since June, which is odd because Russia's pushing for higher quotas. But, you know, maybe OPEC's making a big bluff, right? So if you want higher oil prices, one of the best ways you could do that is convince everybody that you have spare capacity and you're going to bring it on. So nobody else drills. And then
how Machiavelli.
Yeah, well, I mean, and some of it is they're lying to themselves, right? You have all these companies within the country saying, "Oh yeah, we can produce," because they're trying to get investors themselves saying, "We have all this spare capacity." But you know, maintenance hasn't been done for a couple of years, and you know, demand too is tough to predict right now. See, U.S. demand is extremely strong right now, which we're not fully out of the pandemic, and even through August, September, it was surprisingly high in terms of U.S. demand. We sold a lot of cars. People are taking less public transit. And that has yet to filter out to the rest of the world, right? Because the U.S. is generally ahead of the curve or has fewer pandemic restrictions. So we could be in a position where oil does something like gas is doing. I mean, maybe not.
There's your natural gas start. Yeah.
But $150 oil, is that in the cards for next year? What is it? And what does it look like? Certainly good for CAD, but for global growth, you know, you start, and then what about, you mean, aluminum? We're seeing it, steel, we've seen it, for every commodity, well, lumber boomed and then bust, there's still a lot that are hanging out right at the highs. And lumber's coming back up again. So there's a lot of money out there, and it's getting easier and easier to see this supply chain stagflation, wage demand spiral getting a little bit out of control, and central banks having to react. And I don't know if there's a great place to hide out in that. Which is scary.
Are you as sanguine on stock prices as you've been throughout the bull market?
I mean, you worry about that tech, tech is long duration asset, tech trade.
Yeah.
That's sort of embedded now in how people feel and what they do when rates go up. And rates, flattish today, but they moved up pretty quickly. There's no alternative. That's what you say, well, okay. And you look around, and even in an inflationary environment, stocks do pretty good, better than most other things. So there's a lot of pricing power in there. I mean, I like commodities better, and that's where I'm at right now. So, I'm not, I don't love what I'm seeing in terms of the price action.
Okay.
That's for sure.
And when you talk about commodities, I know you like oil. The metals have been trashed. What do you think? Gold's trying to put in a nice little reversal day today.
I'm glad you brought it up. I mean, it's such an interesting, and there's everything was aligned for gold, right? If you were to lay out this whole scenario of government spending, stagflation, inflation, I would say, listen, buy gold. And then crypto came along, and that seems to have been the real X factor that it took away a lot of the investment demand for gold. And I think right now sentiment is so bad in gold. We're in this world transition to I don't know if I've ever seen sentiment so bad in gold. Like
I've seen it. What do you look at? DSI's been 10 for quite some time.
Yeah, I mean, anybody in the gold industry, you talk with them. I mean, you talk to these guys over at Kitco who just cover gold, and they're just disgusted with the lack of anything. And it's not that gold prices are so low either. I mean, they're okay historically. Yeah. Gold miners are making money, but they just feel like they've missed out on the boom in everything, right? I mean, any industry you can name, everybody's making money. And I think, the ideal trade for me right now in gold is that we get a washout here. Maybe
still
we get
more downside,
like a real washout, Dale, kind of like the one we saw in August. If you pull up gold, I mean, we had that sort of quick drop. Yes. It looked like it was going to be a real, and it came back, and sentiment, you saw it then, but maybe get one more of those down to 1,500. And I think that would be the time to buy. Now, seasonally, we're in a weak period. October, November is weak. And then you get into that sort of end of November through February is one of the strongest seasonal patterns in all of markets. That's the setup for gold that I'm hoping to trade. Maybe I'm being greedy, hoping for that washout. I don't think there's a rush to buy it right now. But if that inflationary bit comes in, looks like central banks have lost control. Governments, they're subsidizing energy in Europe. They start subsidizing, the spending goes up again. Maybe politics starts to fray a little. The Democrats might not be able to get anything done here. Gold starts to look pretty good. Maybe so does crypto. Maybe they can go together. And that could be a great seasonal trade. And just to tie up energy, seasonally, oil is very weak, October, November. And then you have the first half of the year, kind of end of December through early in the year, it's very strong again. So maybe we're seeing a little bit
maybe you're going to get a gift for Christmas and be able, you see the right here and look at the weekly on crude. You got a little reversal week at new highs. Maybe we could pull back to $60 one more time.
Yeah, and sort of catch it
right in here. Yeah.
I mean, we're in that sort of building
going up. Inventory, the last phase of the dollar going up, one more deflationary or pressure on commodity prices, equity prices.
I mean, OPEC could come out next week and try to. I mean, I think OPEC knows that budgets are being set for. I think that's such a key ingredient. If budgets get set, I mean, they can always be changed, and they say, well, listen, we're not drilling next year, and that just firms up that idea of a supply shortage. and OPEC comes in and says, well, maybe we could pump a little bit more, and oil falls $5 next week. And I think it just, and you get sort of stuck in this range, but then next year it just booms.
Yeah, we get, seasonal strength maybe coming in November, December, and oil takes a month off or so.
And I think we talked last month about gas, and here gas is just insane. And there's that seasonal pattern of gas is very strong now through October. And I think that you wait for that first cold day in New York, and that always seems to get a little bit extra. Okay, winter's here now. And that could usually be October, could be in November, and you get one little last blow off in gas. And I think that'll be it for that. I mean, it's insane right now, gas prices.
Yeah, it really was a beautiful move, and put in, one heck of a base. And you know what they say, Adam, the longer the base, the bigger the launch into space.
Into space, well, the dollar yen, we're kind of seeing that as well.
Yeah, dollar yen, I want to ask you about that because I'm looking for some risk off in the market, and I've been looking at this pattern in the yen for a while that completes up here at about 112.5. It's a 3-drive pattern. And I'm thinking that we could peak here, and along with getting some risk off. And that may put a little ceiling on top of the yield move here. What do you think?
Well, seasonally, you get treasury yields higher in October in 11 of the last 13 years.
Really? Okay.
Big move last year.
That's a
it's not
pretty
like
high percentage.
It is a little bit skewed. Obviously there was a vaccine election, sort of that October-November run. It was the bottom last year, sort of came in late September, last week of September, I think, and then it ran up. But a lot of things happened there, and those were some very big moves last year. So it sort of skews the percentages.
You know what else would skew it, Adam? Do you think that there's enough nihilism in America for us to default?
Well, I mean, this is politics.
Just to say, hey, let's do it, and how bad can it be, and just knock another block out of the foundation of our country.
I mean, this is not going to happen. I mean,
Okay.
It's not. I mean, that's my firm belief. But I mean, it's just I talk about not knowing what's going to happen in China. U.S. politics are similar, right? I mean,
why they're on TV all the time, though.
Biden set this agenda, right? And he's been a politician for 50 years. 49 years ago, he was elected to the Senate.
500.
Yeah, a lot. And this is the week, right? This is the week for him to either get it done or 2 weeks or however much brinksmanship they want to play. And it doesn't look good right now. But maybe you can kind of manufacture a crisis and put the debt limit in it, and it all happens or it doesn't. But that could look pretty ugly in the run up to it.
Yeah.
Kind of pray that we get that sort of kicking and screaming freak out in markets to buy that dip, because I think that's the trade on it.
I saw a tweet. It's apolitical for one reason. It knocks both sides, and what it said is Biden is our punishment for electing Donald Trump.
Well, I mean,
so there's both. What do you think?
Well, I listen. I'm just kind of waiting to see what happens.
Anyway, I thought that was pretty good because you don't like it if you're a Trump supporter, and you don't like it if you're a Biden supporter. So anyway, it was equal time, and this is what's it going to be if this doesn't go down? Lame duck president for 3 years.
Well, I mean, you've got this one shot with the majority here. I mean, you've got to guess.
But why is it one shot? Why?
Well, you've
got
until midterms. You got till midterms. You've got another year.
It doesn't have to be. Maybe the market needs a little tarp.
But I mean, you could think if it doesn't get done now, it's not. It's like Obamacare when it failed, when Trump tried to repeal it, and it didn't. Those votes didn't come in.
Yeah,
I don't think you go back and try to do the same thing again and just hope that someone changes their votes.
Maybe it's like TARP. They change their vote when the market tumbles.
Well, there's that leverage, a debt ceiling leverage.
Right.
It's just who's going to use it, and I don't know that but you could see the market kicking and screaming ahead.
You'll be trading it.
That's sort of the trade, I think. Obviously, it gets resolved. Obviously something happened. I mean, whether it's just the bipartisan infrastructure, something really watered down in reconciliation, the debt ceiling. I mean, that's what's going to happen.
Okay.
So what's the trade? Well, hopefully we get the market freaking out ahead of it.
Well, it would be long the dollar. Give me an upside target. A lot of Elliottians are pointing towards 96. You know, there are some bulls saying we could go 97.5. Why can't we challenge the COVID high?
I mean, you can't fight this. I mean, that's such a technical break, and not just the dollar index, it's the euro, like it's so incredible the move we've seen. What makes me hesitant is tying the inflation and supply back to it, China. It doesn't tie in so nicely to a US dollar bid. Maybe if we get some stimulus in the US, you could say, wow, the US is going to come out of this really strong, but I don't see why a stagflationary, reflationary, or supply chain bottleneck issue should be uniquely good for the United States dollar, unless it comes with maybe risk aversion.
That's it.
But then is the euro dollar such a risk aversion trade, or dollar yen? You think the opposite in dollar yen.
Yeah, I'm looking for I think we might have a sale. Can't we have a US dollar yen enter a big corrective phase and the dollars still go up?
Well, yeah, especially dollar index is so heavily weighted on the euro. But why,
right.
Why should the euro, in such a bad situation, you'd think bonds would be bid, the euro would come back. So, I have a hard time, and I just keep coming back. Okay, it's quarter end. Let's see what it looks like in a week. And then we probably got to get through that debt ceiling mess.
Yeah.
Stocks will do what they do.
Let's see where this line comes in. I forgot I had it.
So, I mean, I'm looking for things that will last beyond that. And I just get taken back to commodities over and over. And it just looks so much better there. Unless China, crunks out. So there's just a lot of balls in the air right now. And it's probably caution is warranted. I know there's going to be money to be made here. But man, I'm looking at a lot of fog right now.
Here's an ETF and that has a lot of agricultural commodities, Adam. And I would love for a strong dollar to generate some type of fib retracement, because I really like the agricultural commodities because, the Fed can't print corn.
And I wonder what happens in the fertilizer space, right? You wonder if the energy goes straight back into fertilizer, especially natty. And if we end up planting less, or we see harvesting problems. I mean, we see these labor shortages. You have a lot of immigrant workers harvesting, and maybe we get the sort of shortages there that lead to, bad harvests. And I don't know, but a lot can go wrong. It seems to be going wrong in global supply chains. And I don't think we've seen that in agriculture yet.
Well, China owns 50 to 60%, has a stockpile of above ground grain supply. They've been stockpiling wheat and grains, not just gold, for years.
Right. Wow.
Why?
They need it, though.
Why?
Yeah. Well,
famine.
I mean, it seems like a wise thing to do, just in case.
Yeah, it is. Joseph did it. He was the best commodity trader in the Old Testament. He did it he had a trading desk at Pharaoh's.
I mean, preparing for rainy days.
Adam, the sun's always out when you and I get together and talk about the markets, even in, dire times. I really enjoy our back and forth, and I learned a few things for me to take a look at. I couldn't get a number out of you for the upside in the dollar index because you're that kind of trader where you're not going to give objectives. You just go with it till it's not right to go with it anymore.
Yeah, you play those breaks. And I think, a sort of overrated thing is maybe, making long-term predictions, and the underrated one is reacting to the news and reacting quickly. And I think that's what I really do. I certainly have some biases, go with the trend, whether it be fundamental or technical. But when the news happens, if China comes out and says, listen, we're going back to a little more socialism, a little less capitalism, some pretty clear winners and losers if that's the headline. And I think reacting quickly to that kind of thing is so key. And Powell saying yesterday, supply chain issues are getting worse.
Yeah.
And I mean, it's not like there's a playbook for trading supply chain issues.
No.
But you have to think it's stagflationary, and it's negative for stocks, and they're problematic for.
I mean, how can they make money
growth.
if they can't produce anything?
Yeah, and I think a lot of people are out there bluffing or hoping that whatever part it is they need comes in. And so, and then what is it? And I think we're thinking about that, but what about in 2023, 2024? You're talking about China building stockpiles. Well, everybody's going to be building stockpiles of everything. So that is it. If you're in any kind of business now, you're not going to have just in time delivery. You're going to have 6 months of inventory on hand.
The world has changed.
So, that I think prolongs a pretty strong economy, but maybe if it's inflationary at the same time, you end up in this 5 years from now, we get this inflationary spiral, rates higher. I mean, this could be the end of the bond bubble, which is the greatest bubble in history.
Yeah.
And I mean that.
Well, Bill Gross recently said that the bonds are next for the financial garbage can.
Well, imagine. I mean, I don't even think the average guy, even the average market participant, has any sense of what will happen if the bond bubble bursts. I mean, it's calamitous for all financial assets. And I can't even. I mean, it's.
And this is the biggest bond bubble. Last time it was in mortgage securities. Now it's in investment grade corporate debt, which is putting in kind of a negative week, lower high. And that's because they borrowed all this money for financial engineering, for stock buybacks and dividends. And I'm not making it up, because all the airlines went to the corporate debt market prior to COVID and did exactly that. Buyback programs. And then they don't have any business. And instead of using what they borrowed for a rainy day, it's hands out to the government to rescue us.
Well, and that's what I think happens as the bond bubble sort of comes out and housing prices, right? That's the other one. If mortgage rates go up, and I just, as we were talking, saw some MBA, 3%, I guess 3% 30-year fix now, first time up from 288. So, if you get 5% 30-year fixed in the US, I mean, people. And you have variable rates and that people are on in places like Canada too, or maybe in China, I don't know. But, they'll demand help from the government, right? And then the government will give it. And then you get this spiraling of inflation. And, maybe that's where we're at, which would be poetic because central banks just moved to this shift for fighting low inflation, right? We change all our mandates to let it overshoot. And they literally may have top ticked it, or bottom ticked inflation and rates.
Maybe that's why Elizabeth Warren said, Jerome Powell, you're a very dangerous man.
Yeah, what a line.
Anyway, you're a great guy, Adam.
You're a dangerous man, Dale.
I'm a dangerous man. I would love to run the Fed for just a few weeks so I could throw on a few trades.
These guys.
How about you, buddy?
And what a disgrace.
Me and you at the Bank of Canada and me at the Fed.
I don't think Powell's going to survive this. I don't think Powell survives this. We'll see. I hope he does, because I like it. He's a good communicator.
Yeah, it's going to be that. What's her name? She's friends with
Brainerd. She's smart. She's a smart girl.
Yeah, she's a smart.
But she's a dove. It may be coming. It might be a bad time.
Anyway, you'll see me up in. You're where, around Montreal?
Yeah, I'm Toronto now.
Toronto now. You'll see me with a wheelbarrow full of dollar-denominated bills, and you could dump out the currency and take my wheelbarrow.
Well, I've got the Zimbucks right on my wall behind me. Those are Zimbabwe dollars there, a reminder about hyperinflation. So
yeah,
I'm ready.
Thanks so much, my trading warrior brother, for bantering with me, and I think we covered a lot of ground for people to chew on.
I mean, if we're talking again in a month, and I think we might be, it'll be it might be a different world then. It really is really kind of a strap-in moment. Yeah.
Locked and loaded, buddy.
Got it.
All right. Adam Button, everyone. You could find him at Forex Live. Adam's one of the best news traders in the world. And thank you very much for being with us and your generous and giving nature to edify the TradeGATEHub community. I appreciate it, Adam.
Thanks very much for having me, Dale.
All right, buddy. Adios, everyone. Hope you enjoyed it. Good hunt.